It's long-term what?
Okay, let's get started. I went to high school in Florida. After selling basketball cards and bussing tables at Outback Steakhouse, I made enough money to buy my first car. A used 1986 Toyota Celica GTS in faded red that included a sunroof and a tape deck. I was cool. All cars get you from point A to point B, but the features make a big difference. Now that I have a family in Colorado where it snows, a blue Crosstrek with 4 doors and all-wheel drive is cool. All long-term care insurance policies pay for care, but the features make a big difference. As you plan for your older self, you'll want a set of features designed for you that make you cool. Related, our business is helping people buy long-term care insurance. We work with all the top companies that can help you find the policy and features that fit you best. Visit longtermwhat.com or click the link in the description. So let's dig in. When you need care, your policy can pay you in one of 2 ways: reimbursement or cash indemnity. Reimbursement works just like the insurance you already know, like auto, health, or homeowners insurance. You send receipts and you get paid back. When you're older and needing care, submitting receipts could be a pain. And here's our take. Most people say that once they're approved with their insurer, reimbursement runs pretty smoothly, even if setup takes a little while. Often your care provider, like an assisted living facility, handles this paperwork for you. With reimbursement, you're only paid for your care costs, which can result in lower payments. Let's say your care costs are $2,000 per month. Your policy pays $5,000 per month. You only get reimbursed for the $2,000. The remaining $3,000 remains in your benefit pool, but you may pass away before you ever receive it, so you may leave money on the table. To avoid this, choose a policy where your monthly benefits are likely to be lower than your care costs. That way, you'll get your maximum benefits each month. Reimbursement policies usually have more exclusions or reasons you won't get paid. Check the fine print. First, many won't pay your family to provide care, and many won't pay for new types of care that don't exist today. Maybe robots will be a thing in the future.
Hi, Frank.
You have got to be kidding me.
It's hard to predict the future, so these exclusions are worth considering, and we'll help you with the fine print. An alternative is cash indemnity. But first, let's talk about the term. Come on. The insurance industry desperately needs a naming consultant. My daughter showed me her pre-workout supplement called Gorilla Mode, Tiger's Blood. Now that's a catchy name. If the insurance industry sold this product, they'd call it Betan and Hydroprine Glycerol Powder. Yeah, I know. Cash indemnity might sound boring, but it offers a lot more flexibility. You don't have to submit receipts, which is less hassle. In many cases, you receive higher payments than a reimbursement policy. If we go back to our example, if your monthly benefit is $5,000 and your care costs $2,000, you receive the full $5,000. This can give you more money and more flexibility. You could bank this extra money to pay for expensive care later. And these policies have fewer exclusions. You can pay family members or anyone for your care. Let's talk about another boring term: inflation protection. I think benefit growth would have been a better choice. Care costs have risen 4 to 5% per year over the last 2 decades, and you want your benefits to keep up. Most policies offer a few growth options like 3% or 5%. That means your benefits grow every year to keep up with rising care costs. We typically recommend 3% compound growth, but other choices can sometimes make sense. Okay, another awful name. Let's talk about a death benefit. Come on. Death benefit just sounds weird and insensitive. You pass away and someone benefits from your death? Instead, we like to say refund or life insurance. You might pay $100,000 for a policy, but when you pass away, your kids could get back more than what you paid, like $125,000. People love this feature, and honestly, it's pretty great. Can you imagine having this feature with your auto insurance? You don't file a claim, so you get your money back?
There's no way that I'd even try.
Let's talk about payment schedules. Most insurers give you a few ways to pay, once, over 10 years, or even longer. After you've finished paying, you're done for good, and your benefits can kick in at any point down the road. You'll pay less in total the shorter your payment schedule, so we recommend you pick the shortest option that you can afford. Okay, we've been covering a lot. Let's take a short break to look at some cute little puppies. Ugh. Another terrible name. Elimination periods. This sounds like something an 80s action hero would say.
You are terminated.
This should be called a waiting period. Typically, once you have care, you have to wait 90 days before your benefits kick in. But some policies have no waiting period. It's not a huge factor, but those first 90 days can be stressful, and paying out of pocket won't feel great. Let's talk about the benefit period. This is the number of years your policy will pay benefits, usually between 2 and 8 years, though some offer lifetime coverage. This period starts when you begin receiving care, not when you buy your policy. This is a big feature to think about. While the average need for care is around 3 years, conditions like Alzheimer's can last more than 8. Longer benefit periods cost more, but they're often worth it. Finally, tax benefits. Long-term care insurance comes with some nice tax perks, like the fact that benefits are usually tax-free. Some policies break out separate premiums for the life insurance and the long-term care portions that can help you save on taxes when you buy the policy. If you're paying for coverage through a business that you own, this feature can be especially valuable. If you live in Colorado like I do, having all-wheel drive really matters. It's a feature that fits the way we live. Long-term care insurance should work the same way. The feature should fit your life and what you care about most. You might prioritize low annual payments, the most flexible coverage for home care, or longer coverage in case of memory care. Your future self will thank you for making smart decisions now. I'm Jesse, and this is Long-Term What? If this helped, share it with someone who needs it, like it so more people see it, and subscribe for more unboring long-term care tips. For personalized insurance quotes or to learn more, visit longtermwhat.com or see the links in the description. Thanks.